Hello and welcome to Business Today Television. I am Siddharth Zarabi and you are watching our focus on the State Bank of India, India's largest lender, which has recorded its highest ever quarterly net profit. And joining me now, Dinesh Kumar Khara, the chairman of the State Bank of India. Very warm welcome, sir, to BTTV. And I want to begin by congratulating you on the numbers because these numbers are absolutely stupendous. A quarterly net profit of 13,265 crore, 74% growth on a year-on-year basis. What led to this spectacular performance?
Thank you. Thank you very much. Well, of course, there are various contributing factors. The operating profit as well as net profit has come out very well, essentially on account of the core income stream. And there is hardly any exceptional item which has contributed to this kind of a growth. If we really look at it, we have seen that our credit has grown very well, and it is in all the segments, right from corporate to retail to SME and the agri. So actually, for the first time, perhaps the corporate credit, which is very highly competitive space, has grown faster than the retail credit. It has grown about 21%. And similarly, the retail has also grown very well. It has grown almost at about 20%. Apart from that, our book to the extent of 74% is linked to the variable rates, MCLR and the EBLR. And that has also helped us in generating a better income, interest income. So I think these are some of the contributing factors. And on the top of it, our credit quality being good has helped us in ensuring that we have the net NPA numbers are less than 1%, it is 0.80. And also we don't have any aging provision requirements. So that has also helped us in ensuring that our profit should be of that order. Even our international book has grown very well. So I think practically all the subsegments have performed very well. That is one of the reasons why we could register this kind of a growth.
Before I ask you a couple of more questions on the granular part of the results, I just want you to tell our viewers, do you expect this kind of stupendous growth to continue? Because 74% is the point that some people may want you to talk about is it going to be a one-off?
See, the point is that the base effect is one such factor, but I would say that the growth in the banking sector is also, it depends upon the real sector growth. So I think the kind of positivity which we have seen in the recent festival season in terms of demand, that actually augurs very well, and that gives us enough opportunities to lend. And I think with that, it may not be as far as the growth which we have seen, the credit growth, which is almost as high as about 20%. It may not be in that range, but we still expect that 14 to 16% kind of a credit growth looks to be a reality.
One of the key points that emerges from a reading of your latest numbers is the corporate performance that you just touched upon. Do you think the corporate part of the book will continue to drive this kind of growth, because that is clearly linked to higher investments and hopefully better capex in the overall economy?
Well, of course, another very important component is the capacity utilization, which has improved almost to the extent of about 75%. Working capital limits which have been sanctioned have gone up, and also the availment has also gone up. So earlier it has gone up by almost about 5% on a YOY basis as far as the availment is concerned. Working capital limit have also registered a decent growth. So and also the term loans, which are undisbursed term loans, that has come down, and new term loans have been sanctioned. So as I mentioned, that it is all a function of the economy and the demand in the economy. Since the demand has been encouraging, so that is something which has led to this kind of a behavior in the corporate. And apart from that, the corporate corporates used to borrow overseas market in the past, and now overseas interest rates have started moving up at a much rapid pace. And if we add on to the hedging cost to the loan rates there in overseas market, then perhaps the corporates can raise almost at similar number, similar kind of a interest rate in India. So I think that is the other reason why we are seeing a decent corporate growth also.
Uh, what about the expansion in net interest margins at around 32 basis points? Do you expect that also to continue at the same levels as the latest number?
Well, the when it comes to net interest margin expansion, it is a function of the cost of deposit and the cost of our yield on advances. So, since our book to the extent of about 74% is linked to the variable rates, whether it is MCLR or it is EBLR. So that is one of the reasons why we are in a position to pass on the interest rate increase to the borrowers. So I think we do expect that the NIM expansion should happen, but at 32 basis point or so will actually depend upon, since we are very mindful in terms of the quality of assets also which we want to book. So the competition for such quality assets, that is also one of the contributing factor. But yes, of course, NIM expansion should be a reality. But how much of that will be happening? I think we'll have to wait and watch.
Since you spoke about interest rates, it's my understanding that a complete pass-through has not happened. Perhaps the pace at which the rate hikes to your borrowers versus what is happening in terms of the repo rate. Do you see that also changing, or will it continue at the current trend?
No, I think it is happening, though it may be, when it comes to MCLR and EBLR, MCLR has gone up by about 90 basis point, though, and repo rate has gone up by about 190 basis point. So EBLR has, of course, EBLR is a direct pass through. So 190 basis point it has gone up, but MCLR has gone up only by 90 basis point. So similarly on the deposit sides also, even the deposit rates have moved up. But though our otherwise our cost of deposit has moved up just by about 4 basis point. But we are selectively we are increasing the deposit rates since we are having a sufficient liquidity in terms of our excess SLR. So that is helping us at this point of time to support the credit growth. But nevertheless, we are mindful of the fact that deposit is also, one has to look at it as it's more like a franchise. So that is the reason why in the retail term deposit we have from 7 months to about 12 months we have already increased it by about 110 basis point, while the bulk term deposit rates have gone up by about 240 basis point. So that's how the situation is. So, but there are many dynamic factors. But nevertheless, I think it is moving in tandem. It may not be fully passed on, but it is moving in tandem with the policy rates.
Another part of the sort of healthy numbers is that fresh slippages are down almost 76% sequentially. Again, there could be various contributing reasons for it, but do you see this scenario continuing to prevail? Because if interest costs go up, there would be some borrowers who might start feeling the pain.
We are very mindful in terms of the quality of assets which we are underwriting, and we have ensured that our exposure to the investment grade, which is triple B and above, has improved significantly. So that is one of the reasons why we could achieve this kind of a number in terms of the fresh slippages, and even the restructured book during the COVID also is behaving much better than what we had expected. Though we are keeping a fairly decent cushion to the extent of as high as about 30% of the provisions have been retained for that book. But overall, if we look at even SMA1 and SMA2 also for that book, it is within 9 to 10%. So I think that is also giving us enough cushion, and I expect that there should not be much of challenges going forward.
One of the other aspects, and while we continue our conversation, I want to bring it to the notice of our viewers, is the fact that it's not just the State Bank of India. The PSU banking pack, if you were to focus on that, SBI up 74%, Canara Bank upwards of 85%, UCO Bank 145%, Bank of Baroda almost 59%, and the Finance Minister Nirmala Sitharaman has tweeted earlier today, and I'll read out that tweet for our viewers and then seek a response from Mr. Khara. The efforts of our government, the continuous efforts for reducing non-performing assets and further strengthening the health of the public sector banks are now showing tangible results. All 12 public sector banks, the FM has tweeted, declared a net profit of rupees 25,685 crore in the second quarter, and total for the first half of the year is almost 41,000 crore, which is up 50% and above 31%. And then she has further gone on to give the individual numbers. Now, what does this represent, Mr. Khara? Does it represent a complete turnaround? Are we finally out of the woods from a macro perspective as well as from the banking pack perspective?
I think there has been special focus in terms of ensuring that there should be a quality lending by all the banks, and the ease program, which was started a couple of years back, has helped all the banks in terms of upgrading themselves, and that is one of the reasons why the best of the governance practices in terms of the credit management got adopted. And on the top of it, the insolvency courts, the NARCL coming in. So that has also ensured that there should be better resolutions, which should be there for the stress assets. So I think all this there is a definite improvement in the ecosystem for the banking system, which has helped in terms of resolution of the stress assets, which has also helped in terms of upgrading the management skills or the management of the loan book. So all these things put together, and also on the top of it, consolidation, which happened in terms of merger of various banks, and excellent capital adequacy ratio, which is there thanks to the capitalization done by Government of India for various other public sector banks. So of course, we are all this while we are plowing back our profit, so that is keeping us in a very healthy position. So all these factors have actually helped in terms of improving the sector. And all said and done, as I mentioned, that economy is also doing well as compared to rest of the globe. So that is also helping the banks to perform even better.
Mr. Khara, a couple of other points that I want to take up with you. One is the core funding costs. Now, data suggests that as far as the overall banking system is concerned, that cost is around 6.2% versus a reverse repo rate of 5.65%. And the point that the author of this analysis says is that banks are obviously therefore engaged in a significant competition to raise deposits. What will therefore happen to deposit rates? What is the outlook that you can share with us?
No, deposit rates, as I mentioned, that we have already started seeing that there is a lot of competition for deposit, and deposit rates have already started moving up. Different banks are doing it differently depending upon their asset liability position. And I think part of it is also a function of the real deposit in the economy, which is available. And also, I think with the government spending increasing towards the second half of the financial year, perhaps there would be more opportunity for banks to pick up the deposit. So I think all that will go along in terms of availability of more resources in the system for the deposit gathering. So this is something which I expect going forward.
Mr. Khara, is it time, therefore, an opportune time to revisit the taxation of interest on bank deposits?
Yeah, we have, in fact, banks have already increased the interest rate. Even we have increased the interest rate. As I mentioned that as against 190 basis point policy rate increase, which has happened by RBI. The retail term deposit in our bank has gone up by about 10 basis point for the duration of 7 to 12 months. And bulk term deposit, we have increased by almost as high as about 240 basis point. So I think much of it is if when we each one of the bank will look at their asset liability position, and depending upon that, where they want to gather more deposits, they will be increasing the interest rate. So that is what we
My,
have done.
my question really was on the taxation aspect of bank deposits,
Oh,
and to add to that, if not
mhm.
for everyone, but at least for senior citizens, to increase the exemption levels. I am not even going into a debate versus other parts, including mutual funds. That's not the purpose of my question. But at a time when there is high inflation, and that is still a reality in India, should the RBI consider this point?
I think we'll be making the recommendations to the government of India for their consideration. So, but eventual call will be taken by government of India while weighing various considerations.
Absolutely, and then we could probably expect something from what you tell me. I'm getting the hint that perhaps we can see something happening in the budget. Mr. Khara, as we wind down the conversation, I also want you to talk about the impact that you see the overall global uncertainty is going to have as far as the inflation situation in India is concerned and the interest rate response that we can expect.
I think as far as inflation conditions are concerned, it will be, all this while our inflation was essentially supply side inflation, which was essentially on account of the disruption in the supply chain. So I think to that extent, that is getting repaired to a greater extent. And the second component for our inflation has been the fuel price inflation. So I think on both the fronts, we are seeing that there is a normalization which is happening. So hopefully, maybe in the last quarter, we can perhaps see the inflation tapering down. This is what we expect. And as far as the policy rates are concerned, I think we'll have to wait and watch, because for the policy rates, it is also the kind of policy rates which are announced by some of the advanced economies. So that will be kept in mind. So apart from that, the inflationary pressures in the economy will be kept in mind. So I think while RBI will evaluate all these factors before they really revisit the policy rates. So that's the kind of an expectation I would have. But I would not be in a position to pinpoint the percentage, because it is all function of the various data points which needs to be evaluated very carefully.
Absolutely, and we will also hope that some of the expectations that perhaps inflation, not just in India, but in the advanced economies, may now be slightly cooling off, at least the rapid pace of expansion in inflation that we had seen, and that would by itself have a salutary impact on the global economy. Mr. Khara, it's always been a pleasure to talk with you. Thank you very much for your time with us. We wish you all the very best for future quarterly results as well. With that, it's a wrap on this conversation with the chairman of India's largest lender after a spectacular quarter. And like I told you through this conversation with Mr. Dinesh Kumar Khara, it's not just the State Bank of India. The Finance Ministry has given us numbers. All 12 PSU banks have done pretty well, and a combination of factors have led to this, and you can see some of that optimism being reflected in the stock prices of these banks, and several of the banks reacting very positively. Overall, clearly the expectation that the Indian economy has weathered yet another shock, the supply side disruption shock that happened on account of COVID, and subsequently the Ukraine war, where we are seeing prolonged effects, massive impacts on the advanced economies, but hopefully India will remain insulated. And as I end this conversation, just one key headline that I would like you to focus on during this chat, the point about deposit rates, at least from an exemption point of view in a higher inflationary environment, for senior citizens, if not all. What I heard from the reply is that this is something obviously being a taxation matter for the government of the day to decide, and who knows, it's less than 3 months away to the next union budget. Perhaps the government of the day may choose to give some more relief, at least to senior citizens who are dependent on the income, interest income from their saving deposit. With that, it's a wrap on this conversation. I'll request you to share, subscribe, like us on YouTube. But remember, Business Today TV is not just on YouTube. We are on Facebook. We are on other platforms, including our website, businesstoday.in. Do log in and see us across platforms. I'll see you again. Till then, goodbye.